we're gonna go ahead and get started. So we done came a long way, man. We've been doing this for 6 weeks. We've been doing this for 6 weeks. We've been talking about our investing journey. We trying to get to this financial freedom. Y'all already know what on the road we came from the beginning to here. So I ain't even gonna waste no time. Today we gonna get into talking about the real deal Holyfield, talk about a little bit of defense, portfolio management, defense type stuff, and paying Uncle Sugar, paying Uncle Sam them taxes. That's the stuff we're gonna talk about today, and that's gonna wrap up the Tim's Tidbit series. If you missed any of the now 6 videos, like I send out the links for the replay, and the playlist got all of the videos on there. Today's will be posted today, and you can download all the slides from all the weeks. So without further ado, we're gonna go ahead and get into it, man. Gonna get to sharing my screen. My Oh my goodness, it's freezing up on me. Look at that. They don't want us to do this, y'all. My Zoom freezing up on me. They don't want us to do this. They don't want us to make it. My Zoom totally frozen right now. There it is. Okay. All right, it's back. It froze up for a minute. I'm like, they don't want us to share this information, man. Okay, here we go. We're gonna get right into it. Sharing the screen. Boom. We here. Tim's Tidbits. You know what I'm saying? We all here smiling together because we done made it this far. Everybody done, set up their investment, they brokerage accounts. Everybody done got their positions. Now you learn about, you studied the market, learn all the different things, and now it's time to figure out some portfolio management. But y'all already know what it is. Y'all know what I got to do. Got to put that disclaimer out there right now. Cause why? I'm not a financial advisor. I'm not a fiduciary. Nothing I say should be taken as financial advice. Do your own research. Investing involves considerable risk, and you should always consult a financial advisor before making any investment decisions. And then you know what we do? We come back out of full screen, and I look you right in your face and say, now that that's out the way, don't let that discourage you from thinking what I'm saying ain't good information, because it's changing my life and it'll change a whole lot of other people's lives, because they didn't let me figure out we can do this, man. And that's why I'm sharing it with y'all. I've been sharing it over these 6 weeks, and I'm just sharing my journey with you, and hopefully you can apply it to your investing journey. So let's get back into it. Let's get into these slides, y'all. Share. Boom. So here we go. What we doing? We done made it, y'all. We done went from the emojis to celebrating. Congrats, you did it. We all the way to the end. We know how to do all of that stuff. We know how to set up the account. We know how to make investments. We know how to study the market. We know all of that stuff because we went over that. And if you need a refresher, go back over the first 5 weeks, because today we're going to talk about the do's and the don'ts when it comes to your positions or your portfolio, or however you want to, whatever word you want to call it. What are the do's? These the most important do's to me. Everybody gonna have their own do's and don'ts, but to me, these the most important do's and don'ts to me. What are the do's? You do want to set your exit goal before you even enter the position. You do want to be patient. You do want to block out the noise. What does that mean? The people hating, the naysayers saying this ain't possible, or saying you're going to lose your money. You block out the noise. Block out the, oh, you need to grab this right here. This the next hot stock. Block out the noise. Focus on your plan, right? Stay the course. That's the next one. Focus on your plan. Stay the course. And then pivot when necessary. What does that mean? If something you chose is no longer a viable option, you go with your backup, because part of your plan is having the first line of attack with a backup to the backup. That's it. Pivot when necessary. What you don't want to do, you don't want to have FOMO. What's FOMO, Tim? FOMO is fear of missing out. Fear of missing out. Stop. Everybody, hey man, you need to get on that GameStop, man. Yeah, GameStop was a cool short-term trade, but GameStop at this moment in time ain't something that you're trying to put money in for a long time. That's a cool short-term trade. You can make some money in the real short term, but we talking about long-term financial freedom. That's what we talking about. We're doing leaps with our options. They call them leaps. You're buying long-term options. You don't want to watch your position every day. You don't want to watch it every day, especially right now in the tech sector. Like, I'm into tech. I'm heavy into tech right now. Tech been going through a correction since the end of January up until about a week to a week and a half ago. So right now it's pretty much look like it done reached the bottom of that correction. So you don't want to watch it every single day, because then it's going to get to you mentally when you see it pulling back. Don't panic during pullbacks. Don't copy what other people do. Don't even copy me. Just take tips from what I did or how I, took my steps. Look at what I did and figure out how you can apply that to your own investing style. My risk tolerance ain't your risk tolerance. His risk tolerance ain't her risk tolerance. So just learn from each other and apply it to your own investing style, because it strengthens numbers. Ain't no competition out here when it comes to this investing. Each one teach one, and then you apply what you need to apply. Throw the rest of the way. If that don't make sense with your investing style, boop, throw it away. And then don't make long-term decisions because of short-term conditions. Meaning right now, like I say, tech going through a pullback. You don't want to go to jumping out your positions because you all scared. If you got a 2-year option and you got 700 days left on that option, who cares if tech pull back for 15 days? That still leave you 685 days for it to come back. So don't make long-term decisions based off short-term conditions. So what we're going to get into first after do's and don'ts: defense, defense, defense. The best offense is a good defense. That applies to sports. That applies to investing. Defense, defense, defense. How can you play defense? One way you can play defense, you can hedge. What's a hedge? Hedging is pretty much taking the opposite of your position or diversifying against your position. Meaning, if you in tech and tech, when tech pull back, just say energy. Just say energy goes up when tech goes down, or energy go down when tech go up. You might take a position in energy and a position in tech, so that when tech going down, you're making money in energy. When energy go down, you're making money in tech. But overall, you still making money, because both of them gonna go up eventually. You can hedge that way by diversifying, and then you can buy puts against your own position during pullbacks. Just like right now, tech been going down since the end of January. If you see it's about to start pulling back by looking at your technicals and looking at the seasonality of your position, you can say, okay, I'm gonna go in and buy a 3 to 4 month put against this same position, and you want to buy it at the next level of support. And if going through all the technical videos, you know what I'm talking about when I say buying at the level of support. So you will buy a put against your position at the next level of support. So while it's pulling back, while it's eating into your profits of your position, that put that you bought is gaining profits. And then when it gets to that level of support, you can cash that put out, and you can take that money and put it back into your position, put it into a new position, or even put it in your pocket, because that's a way you can hedge against your position. That's another, it's a million ways you can hedge, but those just a couple ways you can hedge against your position when you play in the long-term options. You can average up or average down. What's average up and average down, Tim? Like, if you buy into a position and you get it at the optimum time where you bought it during a correction, during the next correction, when it start pulling back, you can buy more, and it's going to be higher than when you bought it the last time. So that's averaging up. It's because you buying more and you averaging in at another pullback, but you averaging up because it's more. It still costs more than when you initially bought it, but it's during a pullback, so you adding on more positions. And then averaging down is if you bought it at not so great a time and it does start pulling back and you're going into the negative on that position, you can buy more, and that's averaging down because it's is pulling your cost basis down from where you initially bought it. Like if you bought it at $100 a contract and then it pulled back to $50 a contract, if you buy some more at $50 a contract, depending on how many you bought, it may pull your average down to $75 or $60, depending on how many you buy. It's pulling your cost basis down. Instead of having one contract at 100, now you got two contracts at 75 because you bought one at 100 and one at 50. So you averaging down in that case. And then pivot, you pivot when necessary. Like if you say, okay, XLK is gonna, do well over the next 3 years, and then 6 months into that position, XLK ain't doing nothing, they ain't performing, they fundamentals falling apart, they just going down. You say, okay, it's time for me to pivot, because your pivot was, if XLK don't do good, I'm gonna go over to ARC. So then XLK falling apart, they thesis don't make sense no more. You getting out of that position, you close that position, and then you take another position in ARC. That's your pivot. This one here ain't working like I thought it was gonna work over 3 years. It's falling apart after 6 months. You close that position, boom, buy your new position in ARC. That's a pivot. You close that totally out and go over to another position, your backup position. So that's the defense, man. That's the defensive strategies that I got. The next thing I'm gonna move into is talking about taxes. But before I move into talk about taxes, I'm gonna stop sharing my screen and ask if anybody got any questions about what I said so far when it comes to playing defense. No questions for when it comes to playing defense. We good. We cooking with Crisco. Cooking with Crisco. Going once, going twice.
Okay. You said something about the strategies. So if I found a strategy that worked with me, in order for us to all benefit, not that that's what I'm doing, if I share what's working for me, it could work for someone else. Is that what you're saying? So share the information once you learn it?
Yes. Share it once you learn it, just like how I'm sharing what I learned in my investing style. Take what you learn from me or learn from my experience, and when you start researching and getting into it and see what worked for you, then share what worked for you with other people, and then they gonna learn from you. And then when they start investing, they'll start develop their own style, because it's like, you see, it's a million different ways to do things on all the different sites that I went to. And when you go to the site, you may like a different feature than me, or you may like a different site than me. And then you may be attracted to consumer discretionary, and I'm attracted to tech. So it's like everybody investing style gonna be different, but everybody can learn from one another, and that'll help us all move forward toward this financial freedom, because there's no one right way.
Okay, thank you.
Any other questions? All right, let's move on to paying Uncle Sugar, man. Uncle Sugar, I want to add to my disclaimer that I always say, and the new thing I'm gonna add, since we're gonna be talking about paying Uncle Sugar, I'm not a tax advisor. I'm not a tax personnel, a preparer, or whatever you call it. This is not tax advice. I'm just sharing with you what the IRS say you got to pay them on the federal level, and if you got state taxes on the state level. I'm just sharing what I got from irs.gov. So here we go, back to sharing the screen. Okay, everybody, I don't care what state you stay in, Uncle Sugar want his at the federal level. And the way it worked with state, the state with the short-term capital tax is taxed as, I'm sharing my screen right. Yeah, the short-term capital gains, meaning if you hold a position for less than a year and a day, it's gonna be considered short-term capital gains. And short-term capital gains are taxed as regular income. So based off of your the way you file, if you look at the slide I got up here, if you're single, it's break down your taxable income here. So you just look at this, you can look at this chart that I got in here. This for the year 2021, or you can go to the irs.gov and look up the capital gains tax or the income tax, whatever you want to look up. You'll be able to find this little chart here, and it shows you the amount of tax that you have to pay on short-term capital gains for the federal level. And this applies to everybody across the board, no matter what state you stay in, because everybody got to pay the federal tax. And it's broke down by your file. This is how you file on your taxes: single, married filing jointly, married filing separate, or head of household. And this is, so if you married, if you single and you make from, go back to him. If you single and you make 85 to 164,000, you got to pay 24% on your short-term capital gains to Uncle Sugar at the federal level, right? And you can, I ain't gonna go through all of them, it's self-explanatory. You can download the slides. And then if you have your state charge a state tax, you got to pay state tax. Here go all the states and how much their state tax is. So if you live in, let me find where, Georgia. If you live in Georgia and you single and you make that range I said, so you got to pay 24% to the federal, and you got to pay 5.75% to the state. So that's 29.75% of your short-term capital gains that you got to pay in taxes when you earning money on your positions, when you cash it in and earn them gains. And it's other ways you can offset up to like $3,000 of losses per year. But that's, like I say, I'm not a tax advisor. You can talk to a tax advisor about that. But this is the taxes you have to pay on your short-term capital gains. Again, short-term capital gains tax, that's regular income, is based off of your tax bracket, how much you pay. And then if you got a state that got state taxes, it's based off of your state taxes by your state. And this one here shows the current rate for all the states as of 2021. And then long-term capital gains. Long-term capital gains is any position that you hold for longer than a year and a day and then cash it in. And then this is the rate at which it's taxed for long-term capital gains. So if it's up to a certain amount for all the filing things, you don't have to pay no extra taxes on it. For long-term capital gains within a certain range, you pay 15%. And like the big dogs, you know, but it's based off of your taxable income on your taxes. So if you married filing jointly and your taxable income is between 80,000 and 501,000, you'll pay 15% to the federal. And then if you in Georgia, you pay that 5.75. So that'll be 20.75% on your long-term capital gains in Georgia, and it'll be 29.75% for your short-term capital gains in the state of Georgia. And yeah, man, that's it. And the free tools that I use to play my defense is, you know, some of the same ones I always do. Barchart.com to look at the asset performance, the option prices. Oh yes, one thing I want to go about with option prices. I don't think I did it last week. I didn't go back and watch the replay, but just in case I didn't, I'm gonna go back and do it now. Then stockcharts.com. If y'all remember, that's the one where you type in a ticker symbol, choose seasonal up at the top, and it shows you the months where it's typically pulled back and the months where it typically is positive. And then before I minimize the screen, got to plug my folk like always. The Come Up series, follow their YouTube page. They're giving out good information. They changing lives for free 99. Again, that's free 99. The Come Up series will change your life with the stuff they teaching you, and they go live every Tuesday and Thursday at I think it's 9 o'clock Eastern. I think it's 9 o'clock Eastern when they go live. And then Ian Dunlap at 8 o'clock Eastern every Monday. He do on the Earn Your Leisure YouTube page. They do Market Mondays where they talk about investing and stuff like that every Monday. They changing lives also with free 99 on Monday nights. So with that being said, I'm gonna stop sharing my screen, go back to me, and see if anybody got any questions. We done made it to the end, y'all. We here. We can celebrate. We done made it to the end. We know how to do it. We know how to do this stuff. We know how to research for ourselves. We know how to pick our positions. We know how to open our broker's account. We know how to put the positions on. Now we just learned how to play a little bit of defense, 2 different defensive strategies, you know. Do anybody got in? Oh, we know what we got to pay to Uncle Sam. And like I say, the slides, you can download the slides so you can look at how much you got to pay based off your earned income. I mean, your taxable income, and how much based off of your state you live in. If you live in Cali, I feel for you, because woo, Cali got them taxes. Any questions, anybody?
Georgia got them taxes. I hate state tax. You know, I
Oh,
grew
yeah.
up in Florida. So I got up here, you know, my first year I owed what I owe, like $6,000 worth of state tax. Something, it was a lot.
Yeah, your sons know how much you owe, baby.
I know that's what I told them, but I said my sons paid my tax that first year. I had state tax.
Yeah. So, do we got any questions? Any question? We can anything that we done covered the whole time. We got 10, we got about 13 minutes. No, we got about 15 minutes. We got about 15 minutes. So from the beginning to the end, just do we got any questions about anything? We talked about how to open a brokerage account. We talked about what are options. We talked about technical analysis. We talked about fundamental analysis. We put it all together, how to use both of them together. And then today we talked about defense, playing defense on our positions. Do we have any questions about any of that?
Let's talk about how you think a financial advisor will feel if you moving your account to somebody else.
They feel it's probably gonna be hurt, and they probably will try to do everything in their power to keep you with them, because that's going to affect their bottom line and their profits. But at the end of the day, that's your money. And if you feel like you got a better opportunity somewhere else, ain't nothing personal about this. It's just business. It's just like I don't go to Burger King on Buena Vista Road no more, because they ain't treat me right. And all the Burger Kings are they franchises. So unless the same person own the Burger King around the corner, this person up here, this Burger King ain't getting no money out of my pocket no more. And if I find out the same person own both Burger Kings, I'm gonna go to a different Burger King, cause my money spent anywhere and they ain't treat me right. And business. I ain't got to shop with you.
Uncle Tim.
Yes, sir.
What's your YouTube channel name?
It's actually my name, but if you type in The Adventures of Super Dad, it'll pop up. It's actually Timothy Rogers, but it's another person that's got a group, and his name Timothy Rogers. They're a big gospel group. So if you type in, you're just gonna find him. But if you type in The Adventures of Super Dad, it'll pop up.
All right.
And then I sent out the link with I'm gonna send it out again today. It's got the playlist called Tim's Tidbits. It's gonna have all 6 videos after today, but right now the other 5 are out there right now. The other 5 out there right now. If you want to go back and look while we talking, I actually text to you now, nephew.
All right.
But yeah, any other questions, y'all? We got 15 minutes. We ain't got no questions, y'all. No question. Anybody want to say anything? I go ahead and end it. Anybody want to say anything?
But as always, great job. You know you did a great job.
Thank you, Auntie.
I want to say great job, man. Appreciate you for sharing the information with everybody.
Oh, no problem, man. Y'all already know what it is. Y'all know what I be saying all the time. They didn't let me figure out we can do this, man.
It's good you want to share.
Yeah, we try.
That's another thing I wanted to say. Like you just said, don't be watching it every day. Like I know some people that do deal with the stocks, they be watching it every day. But
That's
they like
scary.
watch it every day. But you just said don't watch it every day.
Yeah, and see,
It's
okay,
scary.
let me touch on that, nephew. Now, when I already got my walkaway plan in place for like leaving my job. When I leave my job, I am gonna day trade futures. So I'm gonna be watching that every single day, because I'm gonna be actively trading every single day on there. Now, when I say don't watch it every day, that's for your long-term portfolio. Like if you just buying and holding stocks, if you're doing long-term leap option contracts, you don't want to watch it every day, because it'll force you to make a long-term decision off of a short-term condition. So it's like you want to just check on it. You know, you can check on it like once a month, twice a month, you know what I'm saying, to make sure it's still going according to your thesis or your hypothesis or whatever you want to call it. Make sure it's still going according to your plan. And if it's still going according to your plan, because when you follow the come up series strike price formula, you factor in all of these corrections in the pullbacks when you buy your position. You already factor in that cost. Cause like let me just touch on that real quick, because I don't want to put out the strike price formula like that, because that's their thing. If you go to their page, they'll show you how to do it. But pretty much you look at an asset, what it's done over 2 years, right? You take away a certain amount. Let's just say if the asset you looking at, it then earned $10 over the last 2 years. I'm just gonna do a rough draft of how it worked. You take away $5, right? And then you say, I'm gonna take away $5, then I'm gonna add in a 10% correction. So I'm gonna take away another dollar. So now I'm gonna say it's gonna do $4 in the next 2 years, and I'm gonna buy that strike price. Just say it's trading at $100 now. I'm gonna buy $104 strike price and say in 2 years it's gonna be worth $104, right? You buy that strike price. So as time goes, you done took away half, and then you took away another 10%. So you already factored in all of the pullbacks over the next 2 years. You see what I'm saying? And so when you start pulling back, you're not afraid of the pullbacks because you already factored that in. You want to check it to make sure they fundamentals are still sound. You want to make sure they still making money. You want to make sure their business ain't collapsing. You want to make sure their CEO ain't ripping them off. You know what I'm saying? Long as they still according to your plan, you stick to your plan. And
how you find out if they CEO ripping them off and their business collapsing?
That it's like stuff like that. The CEO ripping them off, that's gonna be in the news. But you find out if their business collapsing by looking at the fundamentals. You go to their investor earnings page every quarter. They have to report their earnings.
They have to show that.
They got to report. If they're a publicly traded company, they have to show their earnings every quarter. They call it earnings season. During earnings season, every publicly traded company have to report their earnings. And if you go on Google and just type in investor relations and then put in the name of a company, it'll take you to that company's investor relations page, and you can see they budget sheets. You can see they innovation that they talking about doing. You can see they leadership. You can see everything about that company on that page. And then if you invested in ETFs, if you go to ETF.com and type in the ticker symbol, ETF.com is sort of like the investor relations page for ETFs. Because ETFs is just like a group of companies in one bucket, but ETF.com break down everything about that ETF, tell you about their money, how they doing on their earnings, how they doing on their performance, all of that. That's how you can check on if they still good fundamentally. And like I said, if the other stuff, it's gonna be in the news. If a CEO do something crazy, it's gonna be in the news. CNBC.com. That's one of the other free assets I've been talking about this whole time.
All right.
Don't check your stocks every day.
Yeah.
That was a great question.
Yeah, that was a good question, nephew. Don't check it every day, because them the kind of questions, you know what I'm saying, you got to ask. Because Calandra told me, my sweetest, she said, Tim, people hear you talking, but they don't know how to do this stuff. So, you know what I'm saying, I try to share the free assets that I use so that you will know how to go. Like he said, how you know if this doing it? A lot of people don't know about investor relations page. They don't know that these companies have to report their earnings. They don't know that they got to do that stuff. You see what I'm saying? Knowledge is power. Knowledge is power. Good question, nephew. Any other questions? All right, man. We done made it to the end. Oh,
well, I got a question. I got a question.
Okay.
Are there any stocks that you could? Are there any stocks that you can check like day to day if you're trying to make little portions of money at a time? Is there like any? Because I know most are like long term. You should do long term, but are there any that you know of that you can look at like day to day to make like little bits of money at a time?
Every stock that's out there, that's a good question. Every stock that's out there, there's a potential to make money off it every single day. You can make money because the same things you put into effect for your long-term plays, it's the same thing you put into effect for your short-term plays. And the only reason why I advise anybody, not just beginners, to do long-term plays is because you're buying time. You got time for it to recover if it don't go the direction that you're projecting it to go immediately. In the short term, if you think it's gonna go up and it pull back a little bit, you don't have the time for it to recover. If you think it's gonna go down and it go up a little bit, you don't have the time for it to recover. So any stock that's out there, matter of fact, it's if you go to the Come Up series, if you go to their Instagram page, and the Instagram page is That Come Up series and not The Come Up, is That Come Up series, they got a list of about 35 to 38 different stocks on their stocks and ETFs on there right now. They all been vetted by the Come Up series. They all excellent companies, and it's called the they call them the SIPs. It was 31 SIPs, but it went up to like, it's either 37 or 38 of them now. If you go to That Come Up series, and you will see like all the recommended companies that they got on there right now. It's a lot of tech. It's some like defensive stuff like steel, and some financial stuff like JP Morgan and Morgan Stanley, I think it is. But it's a lot. Just go to That Come Up series, and it's a list of like 30 some stocks you can start looking at right now. But because you can make money with anything any day, but long term, remember, you're buying the time for it to recover if the position goes against you just for a day or two.
I got you. Thank you.
Mm-hmm. Any other questions? I want before I got a few minutes. Go ahead and ask the question if you got it, but I want to go to bar chart real quick because I don't know if I did this last time. Last time when we got together, did I go over like how to see if the options was on sale, like check the option price to see if they on sale? Do y'all remember? Like if it was a good price for them?
I probably missed that one.
I don't think so.
I don't
But
think
we
he
talked
covered
about it
that.
on the phone.
When we talked about like what are options and all that, let me go. Okay,
Yeah, I think you had did because then on the back.
You talked about options and what are options, but I don't remember you talking about it being on sale.
Okay. Let me share my screen real quick. I got about 5 minutes. Let me see. Where my screen's at? Oh, there it is. Okay. All right. Okay. Did I? Yeah, I shared the screen. Okay. So you seen barchart.com before, right? Then I'm gonna put in XLK. So what you do when you on there, you go over here on the left hand side of the menus, you see where it says options, and then you see where it says option price. When you click on option price, then what you do when you get on this page, you want to go to your expiration that you're looking at buying the strike price in. And like we looking at January 2023 for our 2-year play right now, right? So then you change it to, you can either do it at near the money or show all. If your strike price not showing up when you got near the money, you just change it to show all, and it'll show you like all the different strike prices. And then let's just say we're looking at the 170 strike. The 170 strike for XLK, that's I'm winking right now. The 170 strike for XLK, the 170 strike for XLK for January 2023. I done said that a couple times. 170 strike XLK for January 2023 on the call side. But right now you see the last price it went for was $5.95. And let me see. Then you come over here, because if you look at the thing, it say last midpoint ask. So the last price it sold for on Friday was $5.95. So what you do, you come over here to these 3 little dots right here, right? When you click on them 3 little dots, you'll see inside here it says price history, right? When you pull up price history, it shows you, and you have to be logged in. You have to sign up to be able to get to this part of, but it's a free sign up. You ain't got to pay for nothing. Then it shows you what that strike price has did over the past 3 months. It's showing you over the past, and you can filter it by date. And you see like on Friday on the 12th, it opened up at 650, and then it pulled all the way back down to 530, and then it closed at 595. Meaning when the day opened up, it opened up at $650 a contract, and when the day closed, the last thing it sold for was $595 a contract. So that's that XLK 170. I'm winking right there. XLK 170 called January 2023. Yeah, that's a real good price right now. And then when you look at, and what you can do, you can sort it by lows, and you can see the lowest it you can see like the lowest it went for was 310, but that was way back in November. It ain't gonna never get back down there no more. You know what I'm saying? You can sort it, see the highest that it went for back in September. The highest it went for was 1075. So it went for 1075 in September. And right now, when it closed, it was at 595. So that thing on sale. You heard me? That thing is on sale right now. That's a real deep discount. And so that's how you find out if it's on sale or not. Like if the highest it ever sold for was $10.95 and the last thing it went for on Friday was $10, that's not on sale. That's how you can tell if your options are on sale right now or not. You want to wait till a pullback on the asset, then come to barchart.com and look at what it was going for and what it's going for now to see if the options are actually on sale, if you're getting a good price for them.
So you finna put this on your own channel?
Yeah, this gonna be the last one in the series. Okay. Right. I got about 2 minutes and they probably gonna hang up on me. So y'all know what it is. Oh, before I go, everybody real quick, Mama, do you want to do a Q&A session, like maybe in a week or two, a live Q&A session, maybe like a week or two, yes or no?
I don't have any questions.
Okay, Auntie, do you want to do a live Q&A session like in a week or two, yes or no?
Yes.
Yes, 1 and 1. Elohim, yes or no, live Q&A session. Okay, two yes. Sweetie, live Q&A session.
Yes.
3 yes. Hawk, live Q&A session.
Let's do it, man.
4 yes. Geach, live Q&A.
Yeah, man.
Okay, I ain't got enough left to outweigh the yes, so we're gonna do a live Q&A. We're gonna say in 2 weeks. 2 weeks, think over everything we said, go back, look at all the old videos, and in 2 weeks, we're gonna do a live Q&A on Sunday at 3 o'clock. Live Q&A session. Write your questions down. If you got questions, you can like inbox me on Instagram or just write them down and we'll try to get to them. And it's about to hang up on me. So thank y'all for tuning in. Huh?
That means Geese can't call you.
Mom, right. Be quiet, mother. Don't tell my secrets.
All right.
He didn't even have to say that. I was gonna call him anyway.
Y'all know what it is, man. Thank you. Till the next time. I'm gone, y'all.